and it's convinced me that there is no doubt, in my mind at least, the price is being manipulated, is that every single time there's good news that would normally mean like a jump in a stock price, like positive earning reports, like new board members hiring, exciting announcements about the company. Every single time something good happens, the price goes down. And
So
even when we see like 80% or 80-20 buy ratios, the price is either staying the same or going down. Like, is that theoretically possible in a market where it's not being manipulated? Like, is there a way that that could happen, or is that just pure manipulation?
okay, so let's check the stock price. The stock price in January went to 480.
Mm-hmm.
Then there was a drop in like 5 minutes. If you check the candles, it's in 30 minutes, but every time it's dropped from 480 to 115, something like that.
Mm-hmm.
The stock went down to one fourth in matter of minutes, like 6 or 7 consecutive minutes. Every time it just creates a candle, drop, because NYSE has some stop in order when the stock drop like 10% in a minute. They just stop trading it for 5 minutes and then again.
Mm-hmm.
So the reason the stock went from 480 to 115 is that they want to take out everybody who is leveraged on GameStop. So what they do, if you have like 25% leverage at the top, the stock go from 480 to 150, your account is closed. They close your account in January 27. This is the first time they did it. Then again, this happened in like 2 months ago. Let me check the exact time. So a couple of months ago, it went from 350 to half in exactly a couple of minutes.
Yeah.
The reason is that the market maker, come after your stops. So this is the first manipulation they did.
Mm-hmm.
The second one was when was it? I think it was on March.
Yeah, March. I think it was March 11th. It hit its last
Yes.
big peak.
So the drop was half. If you check the number, it's in half, because if you have 50% in leverage, the price drop by 50%, you're done. They take your stock for zero. They take your stock, give it back to the short seller. So this is the first step. Then Wall Street has some phenomenon called sell the news. Okay.
Mm-hmm.
So
Buy the rumor, sell the news.
yes. So what they claim that happening in GameStop is that, yes, everybody knows it's gonna be a good earning, so they start selling it.
Mm-hmm.
But if you just check the tick, the easiest way to find out what's happening in the stock is just check every transaction. For example, I use Webull. Some people say it's not that good. You can't trust that much Webull, but I mean, as a foreigner, it's the easiest app to get in. So if you check the Webull, every time the price is at any price, slowly the retail investor buying one, two, three, four, five. You see the small demand is coming.
Mm-hmm.
And every time the stock is just dropping, it's just big hundreds of uh, massive blocks of trade. They call it lot. Every 100 stock they call it lot. So lots of trade is happening in a very fast move.
Mm-hmm.
But in normal stock, that doesn't happen. You don't see that moves in a normal stock. These movements are not reflecting anything related to the technical or fundamental value of the GameStop. GameStop, the demand for the stock is slowly increasing every time. I mean, these investors, they are not only just buying and holding the stock, they also buy stock in a periodical matter. I mean, you see people in Reddit, they're talking about, yeah, I didn't have dinner tonight because
Yeah.
I bought all of my money in GameStop. So a lot of these people are really believe in GameStop, and uh, and this creates a shortage of supply. There is no supply of GameStop to trade 5 million shares a day.
Mm-hmm.
There is no shares. Where these shares comes from?
Mm.
This dark pools. Where these shares come from? Who has those shares that you are trading every day? 5 million shares, and then The good thing about GameStop, if you see the volume is slowly decreasing.
Mm-hmm.
These new rules come up. I mean, these people. I mean, there are very very hardworking people in Reddit. Every time there is a rule change, they go over all the rules. They read all these pages. They explain it in a very nice matter. So these rules also come in, and this decrease the power of short seller in order to short more stock, because uh, when they when they short more and they want to keep those short after hours, normally they need to provide more collateral. And then on the other side, you just check the Melvin Capital, I mean, return. You see, you see on. Oh, I forgot to tell you something. If you do you know Andrew Ross Sorkin? He's a guy in CNBC. So in January, I think 26, he come on TV. He was shaking, his hands was shaking, his voice was shaking. He said, "Yeah, Melvin Capital is out of the stock." See, the wording is important. He said, "The Melvin Capital is out of the stock."
Mm-hmm.
The stock was like 300, and then the stock went to 450 and then come down. But Melvin Capital made like 20 or I think 20 or 30% in February. If they are out of the stock, how they make money when the stock coming down?
Mm.
You know, the
Yeah.
numbers the numbers don't add up here.
Mm.
It's just
Yeah.
pure manipulation.
Mm. Well, I guess it could be from other investments. Theoretically, it doesn't.
No, no, no. The news is that they are they lost again in I think June on the GameStop.
Mm. Oh yeah, no, I mean they're down. I think something said that they'd lost like 50% of their capital this year.
Yeah, yeah.
To date.
So
So
far they
yeah,
lost
so
that
far.
much.
But what I'm saying is like the profits in February are not necessarily because of GameStop. It
Yeah,
could be other
you
things,
can't say
but
that.
I would say the losses are almost guaranteed to be because of this.
But that's the thing. What I believe is that what I think it's happened is that, as I said, I mean, a short seller need to buy it. So if you short 100% of the stock, okay, you need to come and convince 50% of the shareholder to give their stock to you
Mm-hmm.
in order for you to cover. Okay,
Mm.
so I assume they have more than 100% short, but why would they stop? So the more shorts you have, the more percentage of the people you need to convince to sell their position to you. And then don't forget, according to CNBC, Melvin Capital was down $16 billion, $16 billion at one point. Melvin Capital has $11 billion at the beginning of this, so they were down $5 billion. Okay, they were down more than what they all have in the long position, down $5 billion. They get 3.2, I think, billion from two companies, but they still were down more than that. An average person will get margin call. I mean, I get margin call a couple of times before. So you get margin call if you can't cover your margin. But these people, they go over the margin call. They go negative. They go negative 6 billion, and they just only cover that with 3 billion.
Mm. Do you think,
So
yeah, that's the reason that we've seen like an increasing amount being traded in the reverse repo market? Do you think that's where they're going for money and liquidity?
I mean, that's a little strange. It's possible. I mean, why would all of a sudden this hundreds of billions of dollar,
Yeah.
money is just traded? I mean, what's the problem in the banking system? I mean, you see the banking stock are coming down. I personally, I think this hedge funds, because I think it's impossible for these shorts to cover because the other side is not selling. So they have only one option to spread their shorts. So they're spreading their shorts to the banking system. That's what I think. So they're spreading the short to the banking system. So if something happened, the banking system will get a bailout for the government. So these people can go inside and say, okay, you give the banks the bailout, you need to give us some bailout too. That's what I'm thinking happened in the last 6 months.
Mm.
Nothing about GameStop is normal.
Mm.
Nothing about news you hear about GameStop in TV is normal. Nothing that they wrote in Benzinga, that's all different websites, that news agency is normal. I don't trust any of them.
Thanks for making it all the way to the end of the podcast. Don't forget our sponsor, ExpressVPN, and my book, Brexit, The Establishment Civil War, can both be found in the links in the description below. And also, please like, share, and subscribe to this podcast. It's the best way to help us grow. Until next time, thanks for listening. Screw the hedge funds.
You can make as many rules as you want, but if there's no teeth behind them, what's the point?
Well, like Citadel is potentially just gone in a few months. It feels like financial institutions, that they are all laughing at us by buying GME. Screw the hedge funds. Like, I will lose my entire investment if it brings them down.
Why on earth, last May, could you buy the entire company for $200 million?
What's been happening on Reddit and in social media and in the marketplace has never been seen before.
I argue that nothing is off the table. There is nothing off the table when dealing with the volumes of money in something as big as the United States stock market.
The hedge funds have clearly underestimated a group of people raised on Friday night World of Warcraft raids.
Dark pools, they're another mechanism to manipulate and cheat. Mainstream journalists don't say these things for a number of reasons. One is their sources are the people that I'm talking about, and so they can't call somebody a crook.
Superstonk and the other communities that have emerged are a hive mind, the likes of which we have never seen before. It's madness and brilliance, insanity and genius all rolled into one. It's very possible that Citadel will be gone in a few months. And not just Citadel, but the entire financial system has the potential to come crashing down. These crooks continue to gamble recklessly with the world economy, and this could be the moment that they finally get their justice.